Okay, I'm going to slowly get started here today. We do have more people still logging on and joining us, but I want to thank you guys for being here. We will be doing a presentation over crop insurance today. Mr. David Stevens is going to be the presenter, and I will gladly let him tell you all of the wonderful things that he uh, does. But I wanted to say a shout out to the Southern Risk Management Center for being a really great partner to us and providing this extension risk management education. And so, with that, I will do a few housekeeping things as far as we will be recording this. The recording will be shared via email. I'm going to guess probably next Monday. It's just a little bit dependent on how fast we can get it posted to our website. And then I will share it via email with a recap of this webinar. Along with that, email can be shared, and this recording can be shared with anybody to be viewed, because we want everybody to be able to feel like that education can be utilized. And also, the other housekeeping things that I have is making sure that you can use the chat or the Q&A box if you have questions or comments during the presentation. At the very end of the presentation, I will promote everybody to be able to speak. And so if you feel more comfortable asking questions while speaking, instead of putting those in the chat, feel free to wait till the end of the presentation and I will allow everybody to have the opportunity to speak. Just make note of your questions if you do that so that you have their ability to remember. And at this point, I'm going to turn it over to Mr. David Stevens and let him share his screen and kick off this presentation. I just want to thank you guys for joining us today.
Thank you very much. Good afternoon to everyone. As she said, my name is David Stevens, and I'm with the University of Arkansas housed Southern Risk Management Education Center. USDA looking at data in terms of farmers who have some type of crop insurance, looking at producers who had significant losses and out of some level of concern, worked with Southern Risk Management Education Center and said, hey, we want to put together a program such that we can aggressively go out into these communities that we see are not represented in any reasonable numbers in terms of those who have crop insurance. So when they put that agreement together at the University of Arkansas, they put together a team. I'm one of those members, and they put together a project um, that's basically a risk management project. As you see on the slide, there are 4 different risk management education centers. When USDA looked at its data and say, hey, where do we have exposure in terms of those producers that we see are significantly not here when we look at crop insurance, it was the southern region. So when you look at those states in the southern region, I actually work for the University of Arkansas. I live in Texas, and I provide direct support to Oklahoma and to Texas. Now, I've given presentations in California, I've given presentations in Florida, and I've given presentations throughout all of those states. So I'm not just Oklahoma and Texas, where there may be national events, where there may be events such as this, whether it's via Zoom or in person, we show up to present. And I want to emphasize that crop insurance is just one of those risk management tools. Again, that's Southern region. Um, One of the things that we noticed as we began doing this work is that before we can really have a conversation about risk management or crop insurance, there's some administrative or financial planning things that that need to be in place. And one of the partner programs to us at SRMEC is what's called the Ag FTAP, and that's the Agricultural Finance Tax Asset Protection Program. Now, Ag FTAP is a program that, via the resources of going online and accessing this particular website, you can get access to many tools that help you in terms of establishing your business of farming. Specifically, if you look at the center of the introduction to risk management, again, when you go to this site, if you go to that tab, you'll be able to pull up resources, pretty extensive resources that speak specifically to risk management. And one of the things that I want to emphasize to you is that uh, crop insurance is one of many tools that you can use as part of your risk management program. Um, but when you look at risk management and you look at your operation and you realize that if you are in the business of farming, whatever level you are at in farming, there are 4 or 5 different risks you take every day. You take a risk of production, rain, drought, bad crop, bugs that affect your production. Your production doesn't come in at the level you expected. You got a financial risk associated with that, marketing risks. Uh, you got financial risks, not having the capital to plant or to buy stock or whatever it may be. You've got potentially some legal issues. Those may be major, may be very small, but we want you to consider all the risks you take as a business person. And farming is a business, and that's the mindset in terms of risk management, tax planning, business planning, we want the producers to really stop and say, hey, this is a business, and let me look at it from that perspective. Another very important risk is human. Sometimes we are one or two man or woman operations. If I have significant amount of my income coming from my ag production and I get sick, or if I get hurt, what happens to that business? Do I have a plan in place to address if I get hurt, if I get sick, if I'm not able to work it? Do I have an agreement with my neighbors? Do we share work? Do I have an agreement with my family, although they may live in another area, that they come back and help me from time to time? And I've got some contingency in place. That's not crop insurance, but that is part of the overall risk management model that you look at and say, hey, these individual factors can affect my ability to continue my operation. They can affect my ability to be successful in this ag business space. So am I really comfortable with um, where I sit with each one of these risks? And again, ag FTAP. Uh, Risk Management Agency is RMA, and that's one of the USDA agencies that uh, really sponsor or underwrote our particular project. Our project was titled "Empowering Producers to Manage Risks." 4 years ago, I was at an ag event that was training us to do air property training. And I met Ron Rainey. And Ron sat down and said, hey, I've got a project that I need some help on. My background is not ag, my background is business and technology, but I've been doing outreach in the ag space for about 10 years now. When I had an opportunity to really sit down with Ron and see what this particular project was about, it was in my wheelhouse, if you will. I've got a accounting background. It's a business background. Um, so it was in my wheelhouse. So joining that team was something that just made sense for me. It enabled me to work in the region of producers that I'm very comfortable with, and that's the Oklahoma, Texas area, as well as continue to move about nationally when those opportunities arise. Uh, One of the targeted groups or partner groups, I don't want to say targeted groups, but partner groups, if you look at that region, that southern region, there's a network of 1890 institutions. In fact, there's an 1890 in each one of those states in that southern region. An 1890 institution is a land grant institution established under 1890 type legislation that were specifically for historically Black colleges and universities land grants. So those are the agricultural schools. In Oklahoma, it's Langston University. In Arkansas, it's University of Arkansas Pine Bluff, Southern University in Louisiana, North Carolina A&T, Florida A&M. So throughout that southern region, there is an 1890 institution. When you look at the map and you understand that region, you will see that, well, the largest concentration of minority producers that have substantial size farming operations are located in that area. Not all of them, but the largest concentration of them. When they looked at the data, they say, hey, this is an area that we can probably get a lot of impact from targeting that community in addition to other communities that we're targeting when we go into those areas. So I work very closely with Langston University out of Oklahoma. I work very closely with um, uh, Prairie View A&M University out of Texas. Well, the 1862 institutions are the large, what we call majority institutions. When I went to California, I went to California with Texas A&M University, which is the 1862 agriculture school, the top school in the state of Texas. When I went to Florida, I worked directly with the University of Florida, which is an 1862 institution in Florida, and I was invited there by Texas A&M again. I've done that uh, 4 times. I've worked directly with them. So while the 1890s are certainly institutions we consider partners, we also partner with the 1862. Basically, these are institutions that are called land grants. So whatever state that you may live in, there are probably in the southern region at least two lead land grant institutions. One would be what's called the 1862 or 1864, the major institution. The other one would be the 1890. And if you're in Florida, Florida A&M is automatic, and Florida University, Florida is the other one. And I kind of joked about it as I looked. The SEC athletic conference, almost all of those schools are ag schools. University of Tennessee, Auburn University, Florida, uh, Tennessee, Arkansas, LSU, Texas A&M, Oklahoma is not, Texas is not, but the majority of all those schools, Mississippi State is not Ole Miss, but almost all of those schools are actually agriculture schools. Um, as Haley had mentioned, the SRMEC is an education um, entity, and as part of that education, the first thing that we look at helping producers or individuals who want to have a risk management conversation understand is that there truly are multiple risks that you have, and we emphasize segmenting your business off and understanding their production risks, price market risks, financial risks, legal, and human. Uh, as crop insurance navigators, uh, we want to build awareness. We want you to understand that wherever you live, you have an opportunity to address a number of those risks via some purchase of some protection, when you buy a new car, you get insurance. If you live in your home, you have insurance. If you live in an apartment, any more of the apartments force you to have some level of insurance. So insurance is something that we can't get away from. And if you ever have a pretty significant loss or even a minor loss that is covered, you appreciate it when you have it. It's one of those things we hate to buy, but certainly glad to have. A friend of mine bought a auto maintenance insurance program for her car, and her engine started clicking after a year, and she told me it was a $15,000 repair to get her engine repaired, and because she bought that maintenance, that was covered. So insurance is there to protect you from loss. And as a crop insurance navigator, I'm not here to sell you insurance. I'm here to encourage you to stop, look at your operation, look at your risks, and see how much are you willing to gamble. I make some very conscious decisions about how much insurance I want to get. A very close friend of mine, once his cars are paid for, he goes liability only. He does not have full coverage. He's willing to take the risk that if he's at fault in an accident, he'll push it in a ditch and go buy another one because that's about the amount of coverage he has. That's a decision he made. So, and that's okay. We don't want you to make that decision by accident. We want you to make a decision after carefully thinking about, hey, what is it going to cost me? What is the potential benefit? What is the potential loss? And based on that criteria, you make a decision to move forward with getting some type of crop insurance, putting something in place to protect me legally, putting something in place to protect me in case I get sick or I get hurt or my primary workers get sick or get hurt. But under the crop insurance navigator program, the crop insurance portion is the portion that we really focus on in terms of making sure you're aware of what's available and things of that nature. Uh, Again, we showed you the map, but specifically these are the states that we serve. Now, as I said, I've been to Bakersfield, California area and presented. A couple of weeks ago, I just came back from Florida. I was in South Texas speaking to a group of Hmong producers. The entire room was full of Hmong, native, I mean, probably second generation American born Hmongs, but still maintain their culture. And there are organizations and institutions that service that very specialized ag growing community. So within these states, there are a number of different groups. Every one of these states have an 1890. Every one of these states have an 1862. Every one of them. Uh, why is crop insurance important? It provides access to capital and security to increase your crop yields. It provides a safety net against natural disasters. Uh, Selfishly, USDA in promoting this is not in the insurance business. It's not trying to sell more crop insurance. It's trying to stabilize our food supply network in the country. We're seeing an increasing number of producers that are one disaster away from going out of business. They're one disaster away from quitting, one disaster away from, in some cases, bankrupting. And having some insurance that will address some of those losses is one way to at least prop them back up or keep them going or mitigate a significant number of their losses. And that is essential to stabilizing the food network in this country. If you growing food and selling it at a fruit stand, you're feeding America. If you're growing it and selling it to a reseller, you're providing food in support of America. So whatever level you're producing at, that food production is feeding this country. And as we lose that, we became to have some significant food instabilities. Our food, and you talk about being uh, threatened by foreign, influence in auto and other businesses. Just imagine if they control our food supply. It would be a significant challenge for us to maintain and stabilize our economy. Uh,
Hey,
well, in 2022, $14 billion in securities. I'm going to stop. Are there any questions or comments at this point?
yeah, you have a question for sure. It
Okay.
says, I'm from Guam. What kind of coverage is available for me?
The coverage is based on your particular farming operation. Not say we, the policies are out there. If you are producing a crop, there are policies out there depending on what crop you're producing, what level of coverage, whether it's 50%, 55%, up to 85%. There's policies out there. There are some assistance with the premiums for those policies. So the policies are not tied to your ethnicity, your background, your region. They're not tied to you individually. They're tied to your farm operation. What is it you're growing? There's policies out there for cattle ranchers that may have significant amounts of property producing hay, producing pasture land, which is essential for managing their costs of growing a herd of cattle. Well, there's policies out there based on rainfall that will essentially offset their loss in the event that they have a drought. Well, if they have a drought, they can't grow hay in their hay fields, they can't grow grass on their pasture land, so they have to spend a lot of money to feed or they liquidate their herd. So there's a policy out there they can buy that based on rainfall, that policy will give them a payment that will offset the expense they have resulting from their loss. So it's not an if. I mentioned that group of people because I wanted to emphasize that while Texas A&M is considered a major institution, it provides the support to whoever's in their region. While the 1890s may be considered HBCUs, they provide support to people in their particular regions. That happened to be a community of Guam people who I was invited to come speak to, and many of them were new and beginning farmers in the eyes of USDA because they had not really had a lot of interaction and experience with USDA, but they were very well seasoned and knowledgeable and successful agriculture producers. So, new and beginning is a term tied to those individuals who are new and beginning in the eyes of USDA in terms of that relationship, in terms of that production and things of that nature. It doesn't mean that this is the first time you turned the dirt or you got into this ag business.
You do have one more question. It says, I'm a
Sure.
small scale urban farmer growing in 0.11 acres in Maryland. Will it be worth purchasing a crop insurance for this size of operation? Also, would policies cover damages caused by groundhogs?
Um, it depends on, I know there are some insect and other um, policies that address that. So the size of your operation is based on the revenue. If you're doing spices or something, or you're doing herbs, depending on the revenue, is when you make a determination, is that worth it? Uh, I know people that's got 150 acres of land and they got a handful of cattle. I know one that specifically I had a conversation with. He has chickens. He's got 80 acres. He's got chickens and he's got cow. And he done an assessment. He says, man, I lose about one cow every 18 months. When I looked at what it would cost me and I looked at the potential payback for what I was willing to pay, it wasn't worth it. Now I respected him because he understood his risks. So even though he had 80 acres, even though he had about 25 head of cattle, and he had, I think he was producing something like 10 dozen eggs from his free range chickens. When he looked at his operation, and not that it was expensive, it was just that, hey, my margin is so small, I'm taking the risk because I don't want to spend anything on it right now. So it's your particular. Some people have, there's a gentleman in Houston that on less than 2 acres was generating several $1,000s per month in revenue on less than 2 acres. So it depends on your operation. Urban producers are recognized as producers. They have access to many of the same programs as rural producers. So, depending on the size of your operation, I would tell you, like I tell everyone else, go to FSA, Farm Services Agency, and make sure you have a farm number. That is the start. You have a farm number. You're recognized and identified to the USDA, U.S. Department of Agriculture, that you are a farmer. I think $100 per year, a month, there is a number of revenue that you must, and it's not a lot, that you must show to validate you as a farmer. But you want to go there, even if you're not producing right now, you want to identify yourself to USDA as an ag producer. So if you have not done that, please make a note. Farm Services Agency. That is a USDA agency. That is the starting point for all agriculture producers. If you are inheriting land or you farming on land that family members had, there's already a farm number on it. You would simply be identifying who previously farmed that land. And if you're now taking it over, that farm number would then probably be assigned to you, depending on the type of control, whether it be a lease or you actually bought it or you're buying it or what have you. But everything starts with you identifying yourself to FSA/USDA as an ag producer regardless of size, whether you urban, whether you rural, identify yourself as a agricultural producer.
I do have one question to add
Sure.
to comment there. So as far as like if an individual is in the process of purchasing agricultural land, is it once the sale is complete that they would take that their documentation to FSA, USDA to be able to see if there's a farm member on that property?
Yes, once that is complete. So one of the circumstances I know, and again, if you're buying a whole farm, say 40 acres, and that 40 acres was owned by a guy that was farming, he's got a farm number, and you purchase that farm, you purchase that land, you're not necessarily purchasing that farm number. That farm number is tied to that land, but at USDA's office, that farm number may be tied to that seller's name. Now that you have taken over that via your purchase or your lease or whatever method you got of now managing that property in terms of ag production, when you go to that office, most of the time, I've had two different answers, but most of the time, they will give you that same farm number and the name will simply change. Now, if you're buying 20 acres of previously a 40-acre farm, in that case, you'll probably be getting a whole new number because now that's identified as a different farm.
Perfect. Thank you so much. And I don't see any more questions as of now, so I think we can.
Okay. And please do not hesitate to ask questions. To the ability that I can answer it, I will. And if I can't find the answer, I'll find it and send it back to Haley and them, and they can forward it to you. But do not hesitate to ask questions. They're all good questions. Um how crop insurance works is very similar to traditional auto, home insurance. USDA does not sell insurance. Uh, they, in a sense, underwrite it. They put forth the resources to make sure that the AIPs are in place, and the AIPs will be those entities which are like regional companies, if you will. So you got 14 regional companies, and those 14 will have relationship with individual agents. So just like you buy your auto insurance, your home insurance from an independent agent, you would do the same from an independent crop insurance agent provider. There is an online resource where you can go and look up the agents in your particular area. And I'll point you to that in separate. But I want you to understand that just like the Texas Insurance Commission or the Insurance Commission in your state, they oversee insurance companies, but they don't sell it. Well, USDA oversees it, make sure it's properly managed, make sure it's properly administered, make sure it's fairly available to all producers who seek and want it. Make sure that uh, the policies that are needed are available. Um, that's USDA's role in crop insurance. They don't sell it. I don't sell it. I know of some agents that sell it, but I couldn't point you to an agent right now for nothing. We may know who some of them are. I know one in North Carolina. I know one in Oklahoma. Um, but some of those specialize in the policies for their area. If you go to RMA, USDA.gov, RMA is Risk Management Agency. Okay. This is the website that you'll find. And these are the choices you have. So, uh, depending on what it is you want, again, RMA is one of many agencies under the umbrella of USDA, United States Department of Agriculture. RMA is Risk Management Agency. Risk Management Agency. Farm Service Agency is your starting point. That's where you go to make sure you have your farm number. They provide loans for individuals trying to purchase farms. They provide funding for individuals who need assistance with buying crops, buying cattle, buying something as part of their normal operations. So those are just two of several agencies in USDA. There's an agent locator tool. This locator tool is in that website, and when you click on the agent locator, it will pull up basically where you put in your, I don't know if it's on here. It's not. It will pull up basically some check boxes where you highlight the state, county you're in, and based on your state, county, it will pull up those agents that are available that sell crop insurance to you. Okay. Um, what is available in terms of policies, uh, revenue protection? You can see there drought, moisture, hail, wind, frost, insects, disease. Uh, those are policies the person that asked about. I don't know if it was gophers or what have you. Probably the policy may specifically identify that as something covered under, and the two policies that most often are used would be what they call whole farm revenue protection and micro farm, which is just a smaller version of whole farm revenue. Another one is yield protection. Um, they basically based on a price, a projected price. If that price changes, I know yield kind of sounds like it's production, but based on the expected price, if the price, the bottom falls out of the price, I don't know if any of you are familiar, we had a lot of producers that had a market for grain and things that they were selling the US aid. Well, all of a sudden that market went away and the remaining price was substantially lower than what their expected price was. Well, those people that were covered with a policy were probably in better shape than those that had no coverage. They saw that market completely go away. Area, area risk protection, again, depending on where you're located at, certain different things happen. And based on uh, entire areas, there's some protection there. And then margin is that insurance that covers against unexpected decrease in the operating margin. Revenue loss or significant increase in cost of inputs. So whatever it is that you may be growing or whatever it is that you're concerned with, there is a type of policy out there that will help you through making sure that you got some coverage if that is your concern. Again, it may not be feasible or reasonable for very small producers. It may not be. Um, Whole farm revenue, micro farm, pastoral rangeland, and forage. When we look at the region, when we look at the small farmers, and we'll see a definition of that, these are the three most likely uh, programs that we've seen people show interest in. In Oklahoma, Texas, pasture rangeland and forage. That is the policy based on rainfall, that impact on your pasture land, that impact on your hay fields, which subsequently impact on your cost of feeding your livestock, cost of maintaining your livestock. So that policy will pay out based on rainfall for your particular area. Microfarm and whole farm revenue are very similar, except for different size operations. Uh, as I said earlier, there are basically different coverage levels. Uh, Whole farm is for pretty big operations. They talk about 17 million in insured revenue up to, and you can get a policy to cover 50% up to 85%. Okay. There are some supplements that help offset some of that cost. So small producers, what we call limited resource producers, uh, producers that identify in certain areas, there are some supplements there that help offset some of your costs. So you want to be mindful that, yeah, you may hear a premium, but 50-60% of that premium may be offset. So your premium cost may be half of what you're seeing or hearing. Now, as you increase the amount of coverage you want, you may say, oh, if worst case scenario, if I get 50%, I'll be okay. Or I got some loans out there, I got some bills, I need at least 85% in the event that I have a loss. So that gives you the flexibility to decide what type of coverage level that you may want. Microfarm, these are smaller farms. You see up and up to your right, up to $350,000. So these are smaller ones, very similar coverage, 50 to 85%. Premiums will be based on coverage. And again, now one of the things that I want to emphasize to you is that um, Schedule F is the tax form that farmers file. I spoke earlier about farming being a business. Schedule C is the tax form that you file on your tax return when you have a business. unless you're doing a straight business return. But if you're doing a business under your own tax return, if you're a farmer, you do a Schedule F. If you're not a farmer who operate a business, you do a Schedule C. For crop insurance, they want multiple years of Schedule F. If you are a new and beginning farmer, they don't require that. The Schedule F will detail the type of revenue that you have generated in the past. That helps them understand the potential value of your production and what it is they are insuring. So, what is it that if you have produced $100,000 in produce, or you sell livestock totaling $100,000, whatever that value is that's evident on your tax form, your production records, then that's the basis for determining what your coverage level is. So having good documentation is it's critical to having um, a good crop insurance policy that will cover your particular situation. Again, not a single thing I've said says anything about you as an individual in terms of whether or not you can get coverage. You as an individual, depending on how you identify, depending on your status in terms of limited resource or social dependent, may find that there are some supplements that will assist you in your premium, but it doesn't determine whether or not you can get coverage. Pasture rangeland, again, this one is forage loss, lack of precipitation, rainfall. It's a grid type status, but it's mainly for cattle production. Those who are producing forage, those who are producing that feedstock or that feed for their cattle, which is essential to their growth and essential to their eventual sale and revenue production. Again, for that individual who have gotten to the level where, hey, I'm producing quite a bit. I got not a whole lot of land, but I got specialty crop, and I'm able to take that and maybe create value added products. And as a result of those value added products, people who in some areas are growing hemp and they're doing value added products in the hemp. So they may have 1 or 2 acres of hemp, but because they're taking the various components of that hemp and reselling it, they generate substantial amount of revenue. So the hemp as grown is not as valuable as the eventual products they're able to produce. Now, again, you can't ensure the value of those products, but you certainly can ensure at least some value associated with your hemp, and that's a discussion you can have. And I just use that as an example. There are some spices and some organic uh, produce and products that are grown that are pretty high. So the amount of land associated with it doesn't necessarily determine that it's of low production value. Uh, Again, uh, there are some subsidies that will help you there. Generally, when you file a claim, it pays pretty quickly, realizing that if you are an ag producer and you have a loss, you need to be able to recover very quickly. And again, it allows you to recover. No matter how large or how small, uh, in the eyes of the government, in the eyes of us who like food, it's important. There's some data out there that said those ag producers that are identified as small farm actually produce a substantial amount of the food for our country. So just because you are a small producer does not mean that you don't matter. Uh, there's coverage available in all 50 states. Um, Multiple pro. I mean, there are dozens of different types of insurance. So And I promise you, as creative as you may think about what your needs may be, there's probably a policy out there now. There's no real, there your policy that's going to protect your equipment, your barn, your bins is not the same type coverage that's going to protect your production. So again, this is production. This is not your equipment or your facility or things of that nature. Uh, USDA via RMA regulates. It provides subsidies for the premiums, but it does not sell crop insurance. Are there any questions?
At this point, I'm gonna promote everybody to allow to talk,
And I'm gonna stop sharing.
and I'm gonna stop our recording real fast.